Sentiment is not bad for a week which confirmed that the Federal Reserve won't cut the interest rates anytime soon. Stocks rebounded and yields fell yesterday. The S&P 500 kept floor above the 5,000 psychological mark. Nasdaq 100 jumped 1.30% as the S2-year yield slipped below 4.90% despite data showing a bigger than expected jump in unit labor costs combined to a larger fall in productivity over the same month. Factory orders fell in April, which could have been good news for the Fed doves, but no, input prices rose at the highest speed since the 2022 peak in inflation. So my conclusion was that investors just want the stocks to rally even in May, and defy the popular saying, sell in May and go away. Good news. Apple did just fine after the announcement of its most feared quarterly results yesterday, after the bell. The 10% drop in iPhone shipments to China has been keeping investors up at night regarding the Q1 results. The sales dropped 4%, very slightly less than expected by analysts, but a 14% jump driven by App Store sales, higher than expected earnings, a higher dividend and a $110 billion stock buyback sent the stock price 6% in the after-hours trading. The company didn't say anything new regarding its AI efforts though. We will have to wait till June 10th for more details about AI. Price-wise, the post-earnings rally could help Apple break above its YTD descending channel top and pave the way for more gains. On hope to hear something worthy on the AI front in the next few weeks. US futures are up in the wake of better than expected Apple results, and ahead of today's much important jobs data. The jobs data will be more important this time than in the past due to increased uncertainty regarding the future of the Fed policy. The US economy is expected to have added around 240,000 new non-farm jobs in April. The average pay is expected to have grown slightly slower on a yearly basis, and the unemployment is seen steady at 3.8%. A hotter than expected data, especially on the wages front, should easily fuel the hawkish Fed expectations and weigh on equity and bond prices before the closing bell. A softer than expected set of data, on the other hand, should give some relief to the Fed doves before the week comes to an end. We can't predict where the market will be headed after the data, but based on the cost of ATM puts and calls expiring today, Citigroup predicts that the S&P 500 could move 1–2% up or down as a reaction to the data.